and welcome to Business Live. Coming up, Fitch downgrades Ghana to further junk status, worsening the country's ability to borrow. We will be engaging an economist. Also, former Finance Minister Seth Terkper pushes for data transparency to prevent negotiations with International Monetary Fund from dragging as government gets ready to open discussions with the fund on Monday. And Ghanaian.
We have been discussing the situation already as Ghanaians. And so what is required is candidness and transparency, with ourselves.
And Ghana Union of Traders Association raises serious concerns about the continuous depreciation of the cedi, warning the phenomenon is having a negative toll on their operations.
Is it possible that we brought in $750 to shore up the forest, and within a small space of time, it couldn't stabilize the currency?
My name is Beverly Broohm. Do stay with us. Hello again. Now to the details. Rating agency Fitch has downgraded Ghana's credit ratings to CC or further junk status from CCC. Now, this is the second time this year that it has downgraded Ghana's credit worthiness or the ability for the nation to borrow. It's also coming 2 days after President Akufo-Addo took a swipe at ratings agencies at a UN conference for unfairly assessing and rating African countries poorly at a time the global economy was going through a difficult period. The downgrade, Fitch said, reflects the increased livelihood that Ghana will pursue a debt restructuring, giving mounting financing stress with surging interest costs on domestic debts and a prolonged lack of access to Eurobond markets. Now joining us on phone is a financial economist at the University of Ghana Business School, Professor Godfred Bokpin, to share some perspectives with us. Hello, sir. Good afternoon and welcome to Business Live. First off, I guess this news is coming at a difficult time for the nation, more especially when we are about to start a formal engagement with the IMF for an economic program.
Yes, thank you very much. Good evening, and then good evening to our dearest listeners. So, yeah, it is coming at a very challenging time, but it is not surprising. We had anticipated this. We had said long ago that the country's ability to meet its future financial obligations cannot happen without sharp adjustment to income and expenditure patterns, reflecting fiscal policy. And it cannot also happen without financing decision difficulties in terms of access to the global financial market. So what Fitch has done is largely within expectation. When I say so, what I mean is that there isn't any surprise from the further downgrade. And also, particularly when you look at the Eurobond that is trading that are trading in excess of 2,000 basis points above U.S. Treasury yields. It is also not surprising when you see that whilst Ghana's Eurobonds are trading in excess of 2,000 basis points above U.S. Treasury yields, the average for Africa broadly has been around just a little below 900 basis points. So if you see the gap between the spread for the average African country and where Ghana is, you can see clearly that investors are not treating the entire continent as a homogeneous continent. They are applying a level of differences, reflecting. When it happens that way, what they are saying is that, yes, there may be external shocks, but individual country immune system then determines how susceptible you are to external shocks or otherwise. So do you see that level of differentiation reflecting in the differences in the spreads, whilst ours is more than 2,000 basis points above the U.S. Treasury yields. The average for for Africa has been below 900 basis points. So there's a lot that tells about our own economic fundamentals and largely blamable on the fiscal side. So a good way to understand this is that if you look at their last downgrade before this one, and up to now, you do not see in clear, practical, predictable terms what the government has done in order to ease the situation, except to maybe blame the whole thing on Ukraine, Russia, blame the whole thing on COVID, and then also maybe developing a program to be presented to the IMF. You know, there's a way that you moderate the market expectations with positive news. So, and as we have said time and again, I think the fiscal side hasn't been that forthright, right, as compared to the monetary side. So if you look at Bank of Ghana with their regular meetings and updates and all of that, you can see clearly that the fiscal side has been largely silent. So there hasn't been any additional information or steps since the last rating that was given by Fitch. And that is why in the next cycle, they don't have a choice than to further downgrade us. But the point is that we are already in a junk territory, right? So we are already on the ground, so falling is more user-friendly now. But what is more critical is that there is a broader consensus now that Ghana's debt situation is troubling. And you see that consensus being gathered even among the international community, the IMF itself, the World Bank, and then also, and even within the local economy, independent-minded people. Sometimes when we say this, it's not like we hate the government or we are anti-republic, but if you are driven by the data, you could not arrive at a conclusion that is largely at variance with what the rating agencies are saying, what the IMF is also saying. We have come to the conclusion that some form of debt restructuring is inevitable under these current circumstances, and it has to be done in one way or the other.
Prof, tell us, what does this mean to the economy? Looking at the rising inflation and the cedi depreciation, are we further in trouble?
Yes. So when you are downgraded in this way, it means that the general risk of doing business in the economy also increases. And so investors who will be looking at maybe participating in our debt issue will certainly hold off, right? And then also practically what it means is that with that junk status, typically you have been closed out of the international capital market. In fact, we have been priced out long ago from the beginning of the year. So that is what it means. But if you can stretch this to mean also that financial institutions that have higher exposure in Ghana government long-term security issue, whether local or foreign, could equally be downgraded. Now, again, another implication in the banking sector or the financial sector is that assuming under the risk-based capital prescription, if a bank's portfolio holding is of a certain percentage, once the country is downgraded, it means that your exposure has increased. So what that may suggest is that you may have to, the central bank you may be asked to bring more capital consistent with your higher risk exposure and control environment now. So if you don't want to go through that, then what you want to do is to sell out, right? Rebalance your portfolio to ensure that you don't have to be asked to bring more capital because your risk exposure has increased by having positions in government securities. Now, another way of understanding it also is that for the general economy, typically when the government is downgraded, it has implications for the borrowing cost of the private sector, individuals, households. A good way to understand this is that the government is the most credit-worthy to lend your money to in a local currency. Okay, the best person or institution to lend your money to in a local currency is the government. That is the safest instrument you can find in the market. Some people even say that is a risk-free instrument, except that the risk-free instrument only exists in theory. There is no risk-free instrument practically in the world. But
so, Prof, tell us, in a minute, tell us what should be the way forward for government?
So I think now that the government is beginning negotiation with a fund, I believe that there will be a lot more information that will come out, because the program that the government is developing and will be presenting to the fund will seek to offer some hope, right? Some hope in terms of debt restructuring, some hope in terms of the fiscal side, because the debt is just a derivative from expenditure revenue imbalances, right? So perhaps there is a lot more that government is doing. Government is putting together in the program to be presented to the fund that is not out there. Okay, so now that the conversation will begin, I'm sure government will be finalizing its program to be presented to the fund. Remember that these rating agencies and other stakeholders are equally interested in what will be in this program. And once there's a lot of confidence from what government has put in the program, that would begin to trickle down and probably, but bear this in mind, when you get to this junk status, and let me ask you, do you read your junk mails? Hello?
Hello, sir.
Do you read your junk mails?
No.
No. That's how investors will be treating the country, right? When you are in the junk status. When you get to a junk status like this, it will take you probably not less than 5-6 years to recover, because, scaling up is very difficult. It's very difficult. I wish the country well. And now, beyond the economic program to be presented to the fund, I think government would also have to look at some governance reforms and productivity reforms that should be pursued concurrently with an IMF program, which may also entail some kind of revisions to our constitution. Certainly, we couldn't get to this level without the support of the constitution. Again, we also have to look at the size of government. It is not good news going to any negotiation table with that size of government. We have said that right from the beginning of the year. It is not as though downsizing the government would save billions of dollars, but the signal and the confidence that would generate, because you could not go through this crisis with such an expensive, largely inefficient government size. When it happens that way, whatever you put on the table, it will be harder for people to infer genuine commitment, and that you yourself, you appreciate the situation and you are taking steps to internalize the austerity before you ask others to come on board.
Prof, thank you so much. Your point has been well made. Thank you so much for your time here on Business Live. But still on the IMF negotiations, a former Minister of Finance, Seth Terkper, is pushing for data transparency to prevent the negotiations set for Monday from dragging. Ahead of the discussion, Finance Minister Ken Ofori-Atta has expressed optimism of closing a deal before the November budget presentation date. But speaking on PMS Press, Mr. Terkper noted that government must open its books to the IMF to finalize a deal in time.
Let me say that from your introduction, we should be looking for a fair program. There might not be much difference between a good and a fair program. And I say this because we all know the situation. We have been discussing the situation already as Ghanaians. And so what is required is candidness and transparency, with ourselves. Because when you are going into any negotiations, it's not unlike the business negotiation. Of course, as you alluded, you have to be prepared yourself, and the positions. But the negotiating partner also knows the situations. If you go to beginning critically from Article 4, 2019, a short while after we exited, which was issued in November. And remember, we exited around April and promised never to go back to the fund. that started a major correction by the fund of what was in the ECF, the latter stages of the ECF.
You're still watching Business Live here on the Joy News channel with me, Beverly Broohm. We take a quick break. When we return, we'll bring you more. Do stay with us. Thanks for staying with us here on Business Live. Now, the Ghana Union of Traders Association, GUTA, has raised serious concerns about the continuous depreciation of the cedi. According to the association, the $750 billion pumped into the economy to shore up the value of the cedi has still not made its significant impact. Speaking on Marketplace earlier today with Darrell Kwao, president of GUTA, Dr. Joseph Obeng, expressed worry the phenomenon is having a negative toll on their operations. He added that although the month ultimatum to government is almost elapsed, come Tuesday, September 26, leadership of the association will be meeting government on the way forward.
The subject of the cedi depreciation, we have heard you talk about the impact on the trading community as well. And last month, you intended to close down shops to protest the impact on your operations, but you had talks with the Council of State and then you changed your mind. You gave them 1 month to fix the situation. I think we are a couple of days to that 1 month. Tell us, are you impressed so far about the handling of the issue with the depreciation of the currency?
The problem that we are having is very fundamental and then very structural, and we need a complete paradigm shift. Otherwise, there's a complete hole in the system. How is it possible that we brought in $750 to shore up the forest, and within a small space of time, it couldn't stabilize the currency?
We saw signs of stability.
Exactly. How long? 2 days or 3 days? Well, if we say sustainability, at least it should have gone about a month or so. But we couldn't see anything. It means that there's something that is swallowing this amount, and that we have to find out. There's a deep hole, and then we have to seal this hole. And this is what I'm talking about.
Yeah, like you point out, the 750 million was not going to be enough. We knew it anyway, that it was just going to be a matter of time, and then we'll get back to the old situation.
But it came to complement a situation. And so it should have been able to work. It means that those people who were waiting, the companies, I've told you, there are about 20 companies that can swallow whole the 750 million. And these are all foreign-dominated companies because we do not have any stake. And they control the juiciest part of the economy. And we know. Let's not pretend that we do not even know.
Yeah, and so that's why we are waiting an IMF deal. Hopefully that when the deal comes pulls through, we are going to see signs of stability. But then back to the 1 month. It's almost 1 month. The cedi is not where you want it to be.
Yeah, I can surely and confidently tell you that the exercise of Bank of Ghana recently is tied up to our petition to the Council of State. Okay. But we had a meeting and complained about all these things. And this is the first signs that I've seen that they actually want to do something. We have a meeting on Tuesday. We are again going on it to evaluate the progress or otherwise of the whole exercise. And we are going to also talk to GIPC so that there should be an amendment of the investment law that we do not leave our trading sector to any foreigner to come in without bringing a corresponding money for trading. You have to bring money that you use to trade. It's not that you bring goods for the forest. That the limited forest that we have here, you just dump your goods and then you just come and take so it should be amended so that whatever volume of business that you intend to do, if even you want to do trading, should be communicated to GIPC, and then the amount that you are going to use to bring these goods should be deposited in Ghana so that you use it, so that you don't fall on our resources that our farmers have toiled to bring through cocoa and other products. It's not fair. So we are doing all these things. And Tuesday we are meeting the Council of State meeting with this Ministry of Finance, Trade, and then GIPC and Bank of Ghana, and we are going to make sure that they do the right things to make sure that these problems that is facing us is done with. Because let me tell you, sometimes it's not even about the amount that is going to be injected into the system. If the structures are not good, the amount, those amounts will come and it still create a problem. So if you do not work on those problems before even injecting this amount, then we are just joking. And that's why we are very serious on this.
Based on the 1 month ultimatum that you have given, and I just want to preempt what you're going to say on Tuesday, are you impressed about how the authorities have managed the cedi, and what would be your next line of action? First,
they promised that they're going to inject $750 million, and they did it, as we all know. And they said that it's also going to be followed with an injection of about 1.3 from the cocoa syndication fund and all that, even before Christmas. So it means that they were able to communicate something to us. And that's what we are expecting. But we are also saying that those problems that we also told them that they are the causes for this depreciation, they have to look and start working on it. And that's why we set a committee with Council of State, and those institutions that are affected have all been called. And now we are going to put the finality to it on Tuesday, so that we send a report to the government for them to start working on these areas. And we believe that if the government take those reports in good faith and acts upon it, we are going to find some solution.
Well, Mr. Obeng, however, disclosed that they do not intend to pass on the cost to consumers, since consumers are already burdened.
Supposed to announce a rate on Monday, I think, but they've had to postpone that because of the engagement with the IMF. And from all indication, well, there are some who think that the rate should go up.
They shouldn't be tempted to increase it again.
But we know that has impacted the cost of borrowing. They shouldn't
be tempted to increase it again. In that case, they are going to kill businesses. Already, we are suffering. Because the interest rate, monetary policy rate being around 22%, have already triggered the commercial lending rates to about 34%.
But the experts say it's to contain rising inflation.
Contain what? That's the elementary, that's the book. That when there's inflation means that there's excess money, more money chasing fewer goods. But there are no fewer goods in the market.
Somebody said there were so many goods in the market.
There's so many goods in the market, and there's no excess whatever. What is happening now is accumulation of cost. From the prices of goods that we buy from outside, the freight charges that we pay, the duties that have gone up here, the VAT that used to be 3% flat rate, that have gone up to 19.25%. That's a difference of about 16%. And the effects of the exchange rate that have accumulated to give us this rising cost of goods and services is not as a result that there are so much goods in the system that we have to mop it up.
So the cost of borrowing is going up, inflation is on the high. The latest number is 33.9%, and the cedi is depreciating, and so there's a lot of cost on you, the traders. You're passing them all on to the consumers, are you? Is that what it is?
Sometimes. You said it looks so simple, but it's not even possible. Because the consumer is also overstretched. The purchasing power has so reduced. If you give another layer of cost, he cannot buy. And when your turnover is also reduced, because it means that they cannot buy the same volume that they used to buy. And so if you keep increasing, they cannot buy, and you can also not achieve your turnover levels. For you to be able to service your loan at the bank, or service that loan, the credit that your supplier have given you. So you are in deep problem.
But there are some people who think that the traders actually inflate the figures, deliberately increase prices, taking advantage of the system.
It's not possible. When you do that, you are killing yourself. Because the business that we do, we are not doing in isolation. We are doing it with our customers. So if the customer is not able to patronize, buy, and order, the customer is so much suffering.
And that's how we end the show for tonight. Thank you so much for your time. For more business news, do log on to myjoyonline.com/business. My name is Beverly Broohm. Enjoy the rest of our programs.